What is going on, YouTube Nation? This is our Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I'm going to show you 5 of the highest dividend-paying stocks to buy right now. Again, this is not financial advice for entertainment purposes only. Disclaimer in the description. But I own all 5 of these. I feel very confident in them. I'll go over a dividend stock analysis, and stock review. But I just want to mention that there is a YouTube subscriber and a follower on Instagram, and her kid is very beat up with the bug, very beat up, and you know what I'm talking about with the bug that's out there. So thoughts and prayers for her and her son. They're going through a really rough time. So just give a quick prayer and have her and her kid thoughts in your mind. So I just want to bring that up. But these dividend stocks are very powerful. They are high yield dividend stocks. I have capitalized on the dip in these. I have them in my M1 Finance dividend portfolio. I'm going to continue to buy them, and I'm going to explain to you why. And this is a crazy time for a lot of these stocks, but I'm in. I feel very confident that there can be a rebound post pandemic, and these guys have a history with revenue and increasing revenue and making comebacks. So I feel very confident in these and making these decisions. I know it's a big risk, but I'll take that risk. I'm young, maybe dumb, but I'll take that risk. So let's check this out right now. I've mentioned this stock. It's starting to make a comeback, and it's doing pretty decent, keeping up with the S&P. That's Capital Southwest Corporation. CSWC is a symbol. I have that in my M1 Finance dividend portfolio. A week ago, and a few weeks ago, it was higher than 6.98%. So this is one that is doing very well with dividend increases. I'll go over that. I'll show you the revenue. I'll go over these guys too, because a lot of you guys that are new to this channel and you guys are subscribing like crazy, make sure you hit that notification bell, by the way. If you're new, smash that like button. But it's year range of 1640 to 2841. And I have a lot of confidence in these guys, and this is why I have them in my portfolio, and I'll explain to you why. Let's check these guys out first. Okay. So they manage investable capital approximately 1.2 billion, blah blah blah. As September 30th, 2021, they have funded over 1.7 billion in new credit investments, including capital invested in its senior loan fund. So let's see what happens. I had to stop. I really wanted to go over a few more things because I was trying to skim through this. So they're a generalist investment firm with certain preferred sectors: business services, digital media and advertising, healthcare products and services, value added distribution, industrial manufacturing and services, consumer products and retail, tech enabled and digital media services. Remember, a business development company. So they suck things up, and remember, 90% of what they make have to go back to us, or they get in big trouble. So let's check out how much revenue they're making. So boom, look at this. This is in millions of US dollars. 9,948, 9,016, 23,474, 35,125, 51,881, 62,039, 68,062. Going up. They are going up even during a pandemic. That is attractive. So that is extremely attractive as a company. First of all, a business development company. Are they making money? Oh, yeah. Do they know what they're doing? It sounds like it because they're making money and their revenue is going up. That's pretty good. Does their portfolio look pretty good? I think so. That's why I own it. Let me show you its dividend history. Look at this: 2017, 24, 26, 28, 89. That appears to be a special dividend, it looks like. 44, 46, 48, 49, 50. It looks like 125 special dividend. 51, 52, 53, 54, 97 cents. So it looks like a special dividend was announced again. That makes things very attractive. It says a PE ratio of 14.97. On NASDAQ.com, it says 7.84. So as a dividend yield. But look at this. This is attractive. Okay, this dividend is increasing over time. How can you say no to that as a business development company? That's why I own these guys. That's why I'm long in them. Let's check out the next dividend stock. Again, it is unbelievable that a mortgage-backed real estate investment trust is beating the S&P in the past 5 years. It is killing the S&P right now. And it's very impressive that just the way something like this and the way it's structured as a mortgage-backed real estate investment trust is beating the S&P. It's unbelievable. Dividend yield is 7.84%, PE ratio is 8.56, market cap is 20.63 billion US dollars. Its year range was 1348 to 2074. Day range was 1817 to 1847. I have to show you the revenue. It's very impressive. Now, again, we are saying millions of US dollars 141, 142, 213, 346, 44, 535, and 603. So these guys are doing very well. And even better is their dividend trends, which I absolutely love. Check 2013, it was 13 cents. Then it hit 15, then it hit 16, 21, 25, 27. Can these guys be stopped? Is the big question. All the way at 36 cents now. So that is extremely impressive. A PE ratio of 7.75, a dividend yield at 8.05%, annual dividend of $1.44. That is extremely impressive. So this is Arbor Realty Trust, ABR is a symbol, $18.36, a mortgage-backed real estate investment trust that is beating the S&P. That's why I own these guys. That's why I'm longing them. I'm probably going to be buying more. Maybe up to 200 shares. I'm going to just keep on going with these guys. It's just so impressive, and their dividend trends are incredible. Now it's at 8.05%, and they're making money. So that's what I like. They're making money. Let's jump to the next dividend stock. And these guys took a big hit, but I'm in. That's why I have my M1 Finance dividend portfolio. New Residential Investment Corp. NRZ is a symbol. It's sitting at 1138. Dividend yield at 8.79%, PE ratio 8.66, market cap 5.31 billion US dollars. Year range was 898 to 1181. Day range was 1127 to 1152. What is so special about these guys? Let's check this. So NRZ is a leading provider of the capital and services of the mortgage and financial services industries. Their objective is to leverage our proven investment expertise and identify and invest in assets that offer attractive risk-adjusted returns while also protecting our existing portfolio and generating long-term value for our investors. So, okay, what is so good about these guys? This is why I bought the dip, and this is why I absolutely love this dividend stock. Check this out. So studying the trends of these guys, look at this. This is in millions US dollars. 346, 645, 1,194, 1,944, 2,192, 2,151, 547. So you're seeing these trends, okay? There's a big, you can play the pandemic card right here. But looking at these numbers with improvements from 2014, 2015, I'm just going to assume, again, this is not financial advice for entertainment purposes, only disclaimer in the description, but I'm just going to assume that these numbers are going to be back up here eventually. I mean, the pandemic really took a hit with real estate and mortgage-backed real estate investment trusts. So looking at the trends, there's probably going to be a rebound. Don't quote me on that. And I'll show you what their dividend history, which make these guys really attractive as well. So just studying the trends from 2013 and 2014, okay, it was 17 to 35, 38. It hit the 50s. Now it's, so studying these trends, 2013, 7 cents, 17, 35, it's been consistent right around the 50s. Pandemic hit, and then these guys started to increase their dividend over time, which will be slow. So there's a slow trend up with the dividend. It's going to take a while to get back to 50 cents. I'm just going to let you know. This is a long-term dividend stock that you just reinvest and keep on putting money in. Leave it alone, see what happens. I mean, there's no guarantees, but you know, there's a lot of potential with these guys and rebounding. So that's why I put money on them and I bought the dip. Let's jump to the final dividend stock. Other one that I'm buying the dip on IVR, Invesco Mortgage Capital. Now look at this. Before the pandemic, it was 17. You're seeing trends of it slowly going up. Right here at 1781, and then boom. Wow, imagine getting that 195 and you like put $1,000 in. Holy cow. So it's slowly coming up. It's making a comeback at $3.10. Eventually, it will probably try to get back to where it was, but holy cow, did these guys take a hit? And I'm reading some articles. They're underperforming, people. They're outperforming competitors. It's gonna take time for this one. So this is one that you just leave alone. Eventually, things will hopefully get better. It has 11.61% dividend yield, a PE ratio 9.58. Market cap is 9.66, 966.40 US dollars. Year range is $2.93 to 4060. Like motor mouthing really fast. Day range 306 to 315. So looking at this, okay, this is the thing that you have to study with this stock, and this is why I bought the dip. This is a big risk. Don't get me wrong. This is a big risk, but I'm willing to take this risk just by studying the trends that I've noticed. Let's check this out. So studying the trends of these guys, one little hit 2014, 650, 2016, a little bit of a hit, 545, 643, 778. Then it flopped, like just down to 280.166. So in millions US dollars, these guys took a huge hit. No wonder why. I mean, that dip was just boom. I mean, they took a slam, like a body slam, and it was just whew. Yeah, I mean, you saw that huge dip. So it's going to take time for these guys to really rebound. It's going to take a lot of time. And this is, something that if you put money in, I'm just going to leave it alone, see what happens. And hopefully its revenue will go back up. There is no guarantees with that. These guys took a killing and a beating. I mean, they took a beating like Ohio State's against Michigan. That they got tore up, okay, in that football game. And these guys got tore up. And I'm gonna tell you, this is a phew, this is a nasty beating. So I'm just giving you a heads up. I'm gonna my play money is going into this right now. So I'm not gonna go all in, but play money maybe 100, 200 here and there. I'm putting it in right now, and I'm going to show you their dividend history, which is attractive as well. So here's the trends. 2015, remember they were talking about those trends. 45, 40, then it hit 41, then 42, then 45, then it hit 50 cents, 2, 5, 8, 9 cents. It's going to take a long time for these guys to improve. So I put a lot of money in them. I'm maybe going to try to get to 300 shares and then leave it alone and see what happens. It's just such a oh, I mean, these guys got killed and took a beating, major beating. So that's one thing to just be careful with. I mean, these guys took I'm saying this 1,000 times. They got tore up. So you have to be really careful with this one. I'm taking the risk. I know the dividend yield's high. It's a high yield. But I'm reading articles, I'm reading some reports. It seems like they're rebounding, but it's just going to take a long time. So if you are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. This is Dividend. You guys have a good one.